how's it going, guys? Welcome back to the Capital Mindset Show. Today, we're going to be talking about Palantir. Now, this was requested in the past, and I was kind of always hesitant to do a video about it. And if you guys watch Strongman Personal Finance, you know, on his live stream, I did say, I think several live streams ago, that I had owned Palantir in the past, okay? And I actually was one of the OG investors. I bought an IPO and a little bit after IPO. I will be sharing that around here, and I'm waving my hand so I know where to put it. And I'll be blocking out the amount of shares because I don't want to share my net worth publicly. But someone really works hard, they could probably figure it out, but I don't want to because of my prospective employers. I don't want them to know how much I have or my net worth. So I hope everyone respects that. But I'll be going over, you know, my thought process when I was buying and when I was selling. Okay. And then that's the case study. Because normally I don't like to do videos like this, stuff about stuff I've done in the past, because it comes off the wrong way sometimes. You know, if someone else does it, like it's like patting themselves on the back, it maybe looks like you're feeding your ego, stuff like that. And I completely understand if that's how some people are going to interpret this. But when I do videos like this, it's because I've decided that in the moment, it actually can serve as a good case study and it can provide value. That's again why I don't like to do videos like this often, unless there's a moment in time where I think I can provide like a case study or some sort. That's why, for example, I talked about the oil trade. It's something I did in the past, but now I'm selling my positions. And then I wanted to showcase like that's a case study for the future that people can take as some lessons, and then we can apply it later down the road. Okay, so this is another example. And what I'm going to highlight as the kind of lesson that I'm going to always remember myself, because as an investor, I'm always going to be learning, right? And so I'm going to kind of ingrain in my mind the lessons I learned from this. And that is the quote from Warren Buffett is more true than you think. And people who claim or quote it themselves aren't actually following it. So that is the classic: be greedy when others are fearful, and be fearful when others are greedy. And that's actually the Graham quote, but you know, Buffett is famous for it as well. And if we take a look, for example, at YouTube, you just search on YouTube, because YouTube is basically a search engine too, Palantir stock, and you see, boom, Palantir. All these guys, by the way, are very bullish on Palantir, except for Everything Money. I got to give kudos to them, because sometimes I do criticize them for some things, but credit where credit is due. They have not been that bullish on Palantir. Okay. But a lot of people are bullish on Palantir. I just go through this, and it's all these people who are really bullish on Palantir. I'm not sure about this guy, by the way. Everyone's pretty bullish on Palantir, right? And oh, look who's that handsome devil right there, Capital Mindset. So with regards to Palantir, you have a lot of bulls who are very exuberant. And then when you have, you know, the classical concept or armchair economist, right? I've referenced that in the past. The armchair economist is that guy who sits in his room and is like an expert in the economy, blah, 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 and thinks he's an expert. Well, you might be saying, oh, you're an armchair economist too. Yeah, fair. Okay, whatever. But the point of it, these armchair phrases that I use, it's when someone claims expertise in something, and also it's not in the search of truth. So basically they are right and that's it. They're not trying to always learn more. They just know, right? And so you have a lot of people who are armchair data analysts, armchair data scientists, armchair whatever. And for example, in my investment career, when I don't know about something, I like to actually consult subject matter experts on it so that I can better make decisions on that investment, whether I choose to avoid it because it's like, oh, that's way too complicated, I cannot wrap my head around that, or it's kind of like, oh, I can get a feel for that. I kind of understand where it's going to go from there. And then I can do the business analysis of it. Okay. So when I initially did an analysis on Palantir, which was when it was IPOing, I thought the fair value was again, closer to $3 to $5 range. And then I put a half position because that's how I set up my positions. I don't always wait for that price. I kind of set a scale, right? And then I kind of buy into it. So I had a half position set up, and then I was hoping it would come down and I would buy more and more and more and more. And then at certain levels, I could buy a lot more. It never got down there, and it just kept going up from there. And then the case study here is we're looking at what all these other people are thinking. What are they all doing? They're all bullish. They're all greedy. And then some of them are quoting Buffett half the time. And then they don't understand that everyone around them is also very greedy about the stock. Even as the stock's coming down, you think a 50, 60% drop is a lot and people are going to be fearful? No, people are bullish. They're buying more. They're buying the dip. When everyone is fearful, that's when you see everyone going, ooh, that stock, that's a disgusting stock. Ooh, that stock's going to go nowhere. Ooh, blah, blah, blah. Those are the words you're going to hear. Not when you see like one or two creators talking bad about, or not bad, but saying, whoa, be careful with this stock. Be very careful. That's not seeing fear, right? Apologies for that. That was my cat. He wanted something real quick, but you know, he's done. All right. So going back to Palantir, with regards to Palantir, I don't like it when an investment I have is beloved by the retail investor crowd. I don't like it. I tend to actually be very cautious with that, because retail investors tend to be the most panicky. They tend to be the one that sells in the immediacy of fear, or they are the ones who do not understand exactly what the heck happened with a particular event. And that's not saying in retail investors only that hedge funds are immune for this, or institutional investors are immune from this. No, everyone's guilty of it. It's just retail investors are more prone to it. And when the retail crowd is heavily involved in a company, I tend to be hesitant to get involved in that company myself. Or if I'm already involved in that company, I tend to look for the exit. Okay. I don't like the high level of involvement with retail. So yeah, Palantir is a perfect case study of that, and that's actually the main lesson of this video. If everyone around you is very excited, and for example, going back to the armchair data analyst, I went to the gym one day, and I had a conversation with this younger guy, and the younger guy was invested in Palantir as well. And what I started to notice, and this was actually when it was really high, when it was in the 30s, right? This was like the kind of the big wake up call for me. And it was the guy was talking to me, and he was telling me all these things about how Palantir is the future, how Palantir is going to dominate. And then all I did was I stayed silent, and I just listened, and I asked questions, right? And a lot of the things this guy was saying, I started to notice, hey, that's actually what people on YouTube are saying, right? So this guy's watching a lot of YouTube videos, right? And, I was as well. I do consume YouTube. And then I was seeing, all these other people talking about Palantir. And I was interested, like, oh, what are they saying about it? And then they were saying all this technology. But I started to notice when guys at the gym are talking to me about it and repeating what they're saying on YouTube, I started to think, maybe everyone's really greedy about this. Maybe everyone's excited about this asset. And then that's actually when I sold my first tranche. I sold my first tranche not too long after that. And then again, I was thinking originally, oh, I'm just going to be patient and wait. And then I was like, no, that's actually silly. I'm going to take my profits here. This is an exuberant price for this company. It was close to like 60 something, like 50 something $billion at the time. The price was like in the 30s. I didn't sell it at the high. I never am going to sell something at the high. If that ever happens, it's complete accident. But I started to sell, and then I didn't sell it all. Like how I enter stocks, I like to exit stocks the same way. I didn't sell it all. And I started selling some calls. I kept getting called for my stocks here and there. I didn't care. And then I sold completely. And I remember when I was in Europe. I was in my Christmas break. And that's basically when I sold out completely. I sold at, I think the last price I sold was like 18, 19 bucks. But anyways, I'm completely out of Palantir. And the amount I was already making videos at the time. And again, I didn't want to talk about it because I didn't think it would provide anyone value. Why would I talk about the stock that I own? And if I didn't want to encourage anyone, because I know despite, it's YouTube, despite me saying, do not copy me, I also have to be aware that some people are just going to copy me. And so I didn't want to promote this company, right? Because I didn't think it was a good value, right? So if you're wondering, why wasn't I talking about this? Because obviously stocks like that are going to grow this channel. More than the stocks I currently talk about, which is these unknown stocks, right? And if I had talked about that stock, I would have indirectly been influencing some people to maybe invest. Even if I said, it's just because it's in the portfolio, people would probably do it, okay? Which I don't want, okay? But with regards to Palantir, I didn't think a video at the time was going to provide any sort of value. But now, now we're in the precipice of, I guess, starting the process of all these retail investors getting out, and we're getting back to the prices where I originally had bought. And the question then becomes, which I'm asking myself, okay, this is why I'm making this video. I started asking myself, would it be a stock I would go back into? And the answer is, I don't know, because remember I discussed, and like, let's actually pull up the stock here. And if we go back to these old videos I was making in January, right? I'll reference them and you guys can go watch them if you want to, but I'll kind of be talking about the message I was giving in those. We were talking about on this channel, November, December, early January, that we're going to have a liquidity crunch. And that was what was going on in China last year. That's why the VIEs were coming down, not because of the VIEs scare, it's because of the liquidity crunch in China. But we're having the liquidity crunch here, and the canaries in the coal mine were going to tell us that. And I was talking about ARK, I was talking about, all these other meme stocks. those are the canaries in the coal mine always of this kind of like bubble-esque popping, right? And then they go first, then come the others. Have I been, selling everything and panic selling? No, I've been buying shares, right? I am a huge cash position, but I am deploying it. All I do is when I find a business I like, I start buying. But the question is, do I want to get back into Palantir? And the answer is kind of, I don't know. I don't think so. Would it be an interesting speculative position to re-enter Palantir at around where I bought it before? Yeah, for sure, right? Would I do so with the expectation that I'm going to make a lot of money? Not for a long time, because again, my fair value originally was around 3, 5. That it was a big range because there's a lot of uncertainties, right? So the more the uncertainties, the wider the range. And so with the company like this, the range was pretty wide. Yeah, just going back into it, I think maybe the range has risen a bit because the performance of the business has been quite stellar. The technology, will it be the future? I don't know. Is there high likelihood from what I've spoken to or who I've spoken to? Yes, there is a huge probability that Palantir is successful as a business, as a technology, but you got to care about the price, right? So if I came to you with a proposition and said, hey, I'm going to sell you a business, right? $2 trillion. Okay, here are the facts. And this is a certainty. Like, let's say, pretend that you 100% know this. It's going to grow at 1,000%. Okay. And it has no competitors for the next 40 years. All right. So moat's insane, right? Would you buy it? If you said yes, then you kind of fell for the trap. And the point is, you got to care about, well, what's the nuance behind it? Well, what base are they growing from? They're growing at 1,000%. And then did I say how long they would grow for 1,000? No, I didn't. So I didn't answer all those questions. Those are questions we need to actually answer before we think. So the point of that, moral or that story is you need to be careful at what price you buy these businesses. Have you bought the next Amazon? Maybe. All right. But what price did you buy? And then you got to worry about this other thing called psychology. Okay. Will you hold in the downtrend? What's the probability tell us? Not likely. Okay. Retail investors are not likely to have the psychology to hold through a massive downtrend. So will Palantir be a $1 trillion company one day? Maybe. What are the probabilities of you holding down through this downtrend? Very low. Statistically, very low. So you got to be honest with you. That means you got to buy at really good prices, right? You can't just buy at whatever price, okay? Because, if you take a look at Amazon, right? And this is a highly quoted stock, right? Everyone goes, oh, look at Amazon. It fell like 80% down over here. So yeah, it fell 81%. Are you likely to have held down that 80% drop? No, probably not. That's basically why it was falling so much, because everyone was selling. And then if you had bought at this exuberant price, how much are you up by? You're up 4,000%, 4,400%. What is the probability that you would have held? Very low. All right. This is again why, the index fund investors have a point when saying Jack Bogle was talking a lot about psychology. And the reason why the average investor does not do well is that the most important organ, and this is actually going back to Peter Lynch, is not the head, it's the stomach, right? Someone doesn't have to be that intelligent to be successful in the stock market. It has more to do with being able to stomach them, but also making good investment decisions. Let me be very clear, because if you don't have the head and you're just buying random stocks that are clearly not going to succeed, right? There's some that are blatantly obvious, and then you're not also managing your risk. But why do you manage risk, actually? That's a good question, because for those of you who studied finance in university, you probably took a class called portfolio management analysis, and then you remember something that was supposed to be taught to you and drilled into your head if you had a good teacher, which was volatility. Why do they focus on volatility? Well, because when you're learning in that class, you're basically learning how the industry works. And if I had clients, right? Let's say I was a financial advisor, I was a portfolio manager for private individuals, right? For your mom and pop, for your grandma. If I was not managing volatility, I would be doing them a disservice, okay? Because I have to understand their psychology. I have to maintain a certain level of volatility so that they don't retreat their money. Okay. And that's something they teach in those classes. Now, if you're dealing with a fund that doesn't care and it's a private investor and they don't really care and they understand, great, because you don't have to worry about that volatility. But if you have those, you have to worry about volatility. Why? Psychology. Okay. Psychology of the investor is super important. So right here, going back to the question I'm asking myself, the whole purpose of making this video, will I be buying? I don't know. Okay. When it gets down to the price I originally bought, I'll have an answer for you guys and I'll make another video. Will I? And it for sure, it's by the way, going to end up in the speculative side. It can get to the core at a certain price. And when I say core, not that it will be a core position, probably be an ancillary position, but you know, like the non-speculative side of the portfolio, it can get there. This company in particular can get there, but at the right price. What price is that? I don't have that answer for you guys yet today. Okay. But what I am saying is, I don't know because of the psychology currently in the market. Everything I've been talking about hasn't changed yet, right? The liquidity crunch is still happening, right? I'm deploying my capital selectively. I'm finding companies. I'm buying Meta. I'm just buying Meta pretty regularly now. I'm actually going to be buying two new companies. I'll be doing videos on those as well. I've already announced them in the new video you've probably already seen. If you haven't, go check that video out. It's the portfolio update video. I'm deploying my capital, timing the market, very silly. Psychology mistake, okay? Even though I said this liquidity crunch is happening, did I sell out of all my positions? No. I sold strategically. I sold my REITs, right? They were my tax advantage accounts, didn't incur a single tax liability. I sold right now some of my ConocoPhillips, didn't incur a tax liability because it was also my retirement accounts. Some of it that's still not in my tax retirement accounts. I am still probably going to sell that one. But yeah, I'm not panic selling. So will I be buying? No, because I don't know what the retail investor's thinking. I think there's a lot of money that has to leave before I even think about this company. And I think we could actually get down to fair value finally. So I'm cheering that on. But yes, if you want to hear the lesson, the true lesson of this video is that this is a case study of being fearful when others are greedy, and then switch over to being greedy when others are fearful. Okay. Actually follow that quote. Do not quote it and not follow it. If you go on YouTube and you see everyone's bullish on it, that's not being greedy when others are fearful. Okay. So on that note, guys, I hope you guys enjoyed this video. Again, I really apologize if it came across as like patting myself on the back. That's not the goal of this video. I hope I was able to derive a lesson. Let me know if you have any questions down below, and let me know if I did a good job at providing that lesson. If not, let me know as well. I'd be happy to hear you guys out. And then on that note, I'll see you guys in the next one. Bye.